I mean, I did all the Bank of America business and I did all the AIG business during the credit crisis. So I saw quite a bit during that time. And, you know, we did George Soros business. We did everybody's business, Goldman Sachs, JP Morgan, you know. And a lot of those people that would use the desk used our desk because they didn't want to use their own.
Right.
So we did what they call execution business.
Here we are with Dan Riley, the one and only.
Yeah.
Also known as Mr. Top Step. So how did you come about that name? I was curious.
That's the name of my internet company. It's been around for about 15 years. It started with Pete and John Nigerian on the Chicago Mercantile floor.
Okay. So how did they come up with that name?
Well, it's kind of based off the top of the trading pits on the Chicago Mercantile. When you were a floor trader, the most valued spots on the floor would be like on the top step of the pit, or at least on the top step closest to the guys that are filling orders, thus Mr. Top Step.
Wow. And you still hold that name till today, I see.
Yeah, it's like I said, it's my internet company. It's been around for about, I think since 2009. I think that's about right, 2008.
So
right toward the end of the credit, right at the height of the credit crisis.
So you've been on the Chicago Mercantile Exchange for how many years?
Well, I started as a runner. I grew up in Chicago, I grew up in Crystal Lake, Illinois. And then my parents moved to Chicago because my dad had a printing company in downtown Chicago. And I grew up with 6 girls and 4 boys, and by the time I got to get ready to go to college, the company wasn't doing well. So I got an offer to go down to the Chicago Board of Trade. My first job was running orders, from a trading desk to the different pits on the Board of Trade, like the bean pit, the corn pit,
wow,
the wheat pit. Yeah.
So what commodities did you focus on? What were you?
I was really never a commodities guy. I mean, I just knew when I came on the floor that there was so much like energy and people pushing and screaming and yelling, and I kind of knew it was kind of up my alley, But
that's awesome.
From the grain room, I moved over to the bonds. The bond pit was the world's largest futures pit. I think they had 600 locals, order fillers, and clerks. In fact, a friend of mine, Jim Carey, whose brother was the chairman of the Chicago Board of Trade, he inherited a membership from his father when he turned 21, and Jimmy started filling orders for John Corzine from Goldman Sachs.
Wow.
Yeah.
Okay.
He went from making like $150 a week to making $150,000 a month.
Wow. So what were, I remember like back in the day, we would see it on TV very shortly on MSNBC or whatever, CNBC, those trading pits on how they trade. And look at it now, like everything's all digital and we don't see nobody and information travels within seconds.
That was a big transition. They started trading, electronic trading, in 1996, and the pits remained open for several years. It just didn't. A lot of customers liked it, and a lot of customers didn't. I think the ones that were trading futures were probably more apt to like it versus the guys that were trading options on the floor. The open outcry way of bidding and offering, the price discovery was a lot quicker than going on a platform and typing in a interest rate spread or S&P option spread. So over time that changed, and the exchanges themselves, including the New York Stock Exchange, closed rooms, and eventually electronic trading took over, and they closed all the pits.
So, would you say that we are more efficient now with technology, or would be back then?
Yeah, I mean, there's no doubt it's more efficient, but almost to the detriment of like smaller traders. Meaning that there's so much high frequency and algorithmic trading going on that little aberrations that happen throughout the day can push the futures up or push the futures down, and you get stopped out, and then the market goes right back in your favored way. I think they say that 95% of all the volume on the S&P Mini is algorithmic and high frequency trading. So it's a small number of like retail.
Did you ever think that we'd ever be where we are today?
Yeah, I mean, I ran the largest S&P operation on the floor of the Chicago Mercantile. So I employed people in currencies. I employed people in the euro dollars. I employed people in the bonds. I employed people in the Dow Jones over at the Board of Trade. And, you could just see it. It was, the open outcry system kind of allowed like things to happen that weren't really, really positive for customers that used the phones.
Right.
There was something called dual trading back then, where I could put in an order to buy 500 big S&Ps, and the broker who filled the order could pop off a 50 lot for himself first and then bid the 500 up and get out as he bid the market up. So it was pretty inefficient. I mean, as far as like price discovery, it was efficient, but the vulnerability of the contract to be front run was it was too easy.
How about news? The way news traveled back then, you'd have to wait for the newspapers to come out the next day.
No. There were boards on the floor. There were TVs all over the place.
Okay.
Bloomberg. There was various ways that we would get, we would get the like unemployment figures or CPI or PPI or any of the bigger stuff that would come out. We were seeing it. It would come up. If you were in the S&P pit, you just had to look up, and there was a board with a ticker tape that would shoot all the prices and all the news out.
Awesome.
But there was Bloomberg on the desk, and there was not a lack of. We got it first. If there was any kind of front running going on, it would show up. Right before the number would come out, or. But yeah, I mean, eventually it just became inefficient, and obviously, with the volume the way it is. It's been a big winner for the Chicago Mercantile. I don't know really, I think volume has kind of declined on the New York Stock Exchange over the years, but...
Why is that, you think?
I think people are more investors and traders than they were in the years. Again, I think...
Less day traders?
Yeah, less day traders.
Mm-hmm. Why do you think that is?
In some cases, I think volatility becomes too extreme, and the amount of money that they want to risk... they just can't. They're very hard to manage risk when, like, the S&P goes from up 2% to down 1% in a day, and that would apply both on the stock side because obviously the S&P has a lot of the major stocks that most people focus on. But yeah, I don't think there's as much day trading as there used to be, and that goes in the futures area too. The one area that I think is just kind of blown up is the options markets. That's become really...
Yeah. I hear a lot of young kids getting into that.
Yeah. Well, that's an easy way to limit your risk, and but again, that's very volatile at times. Now, I mean, 3, 4, 5 months ago, the S&P was moving, 150 points a day, 200 points a day. Now, as we kind of go into the spring and into the summer, the ranges are 30 points, 40 points.
So for someone who's starting out just getting into trading, would you recommend day trading, swing trading, or long-term trading, or what do you recommend?
I mean, I think it's really up to your personality. I mean, if you like what I do, where you can day trade a little bit and close the books at night and not have to worry about the risk, I'd suggest that. But a lot of what we've learned when we go to the colleges and stuff is that, we want to go in there and teach trading, right? But the colleges aren't looking for people to come in and talk about, how to trade an S&P futures contract. What they're looking for is they're looking to teach their classes how to code programs and write these algorithmic and high frequency.
That's another thing, how AI is changing trading now. How do you see that going into the future?
I mean, I think AI's been here for a long time. Citadel and all these major hedge funds and prop trading groups. Yeah, they've been around. What I think is interesting is, I was thinking about it today is, they always talk about the 5, 6, 7, or 8 main stocks that are pushing the market up and down.
The Teslas, the Amazons.
Yeah, but if you look at them, they're technology companies. Look at NVIDIA. NVIDIA's exploded. Look at Microsoft. I think that what's going on is, as they advance their AI stuff, they also have a chip problem going on. So that's been really a big focus for investors. They pile into these, 5, 6, 8 names. And obviously with the move up in the NASDAQ over the last 3 or 4 months, everybody that's owning these stocks is doing pretty well.
Very well. So are there any experiences that you had back in the day in the pits in Chicago that stand out to you till today that you can remember?
I did all the Bank of America business and I did all the AIG business during the credit crisis. So I saw quite a bit during that time. And, we did George Soros business. We did everybody's business, Goldman Sachs, JP Morgan, and a lot of those people that would use our desk because they didn't want to use their own.
Right.
So we did what they call execution business. And that would be where, say you trade at Goldman Sachs, but you hate using Goldman Sachs' desk, right?
Right.
So what we would do is you set up what they call a give-up agreement. That's where you would call my phones on the floor in the S&P, even though I'm not Goldman Sachs, and that agreement that we would sign would state that I would give up those trades to Goldman Sachs. In other words, you'd call, I'd execute the order, I'd write up the order, and send it off to Goldman Sachs. Excuse me. So what happened, which worked great all for years, and there was a lot of concern that, if something really bad happened, that, people lost a lot of money in one day, then maybe those trades wouldn't show up at another firm, and then the guy that executed them would get stuck. But that happened to me on my desk in the S&Ps in 2010 during the flash crash. Do you remember that?
Yes, I remember that vaguely.
That was, what happened was there was a big investment firm that, not even a big investment firm, it was an investment firm that was managing, I think like $1 billion back then, which I guess back then was a decent number, but it's really not in today's standards, because they buy and sell billions of stock on the close every day. So anyways, during the flash crash, the desk was humming along. All morning long, the S&P was kind of weak. And around 1 o'clock in the afternoon, some big sell programs hit the S&P. And what happened was the Dow sold off like 1,000 points, 900 points in the final hour, from like 1:30 to 2:30 or something like that. And during that time, a guy that ran a $100 million hedge fund that was using my desk, he generally would not do a give up with me. He would place the order that he did business with us, and then go to Goldman Sachs, and then go to Dean Witter, and then go to Merrill Lynch, or go to whatever firms he was going to. Excuse me. And we kind of had a rule back then. We from being around all the different various crashes and, about you really don't want to take bigger orders during periods like that, right? You put more risk on the desk, the clearing firm that we work with. And, but anyways, after the market had sold off really hard, the final hour, it started to bounce. And I looked at, I believe the S&P fell like 3.5%, 4%, or 3%. And what happened was the guy that had the hedge fund went through my desk and he gave me the entire order that he would usually break up and give to different desks. And it was a 2,000 lot big S&P 500 put spread, meaning it was the big contract. It wasn't the mini contract. It, wasn't the micro, wasn't anything like that. And what he did is he overreacted. He took off the buy side, the upside protection he had on the spread, and left himself naked, short 2,000 puts.
Wow.
And as the puts crumbled, what he did was he came into the desk and he unwound this 200,000 lot put spread that left him 100% naked short. And then in the final half hour of the day, the Dow Jones and the S&P rallied 2 to 3%. And when I looked at my guys down the line, I asked everybody, how you guys doing? Are you all right? And everybody shook their heads. And then there was one kid at the end of the desk that we always were kind of suspect on his abilities and stuff. I said, you all right down there? He's like, you better come down here. And I walked down there and I looked on the desk and I said, what in the fuck is that? And he said, oh, Jonathan put this order in and he told me that if you don't fix it, you're going to be out $9.8 million.
Wow.
And I said, fix what? I said, what the hell is he doing? He says, well, he wants to talk to you. So I got on the phone. He was short. I don't know the prices of the puts, but he was long the puts at like, I think at like 50 cents to $1. And when he got out, the quote in the pit was 2,500 points at 3,500 points. He bought 2,000 at 3,500. And by the time the markets rallied, had he not done anything, he would have only been down about 0.5%. We did all the math on it. So he left me with a $9.8 million loss.
Wow.
Yeah.
$9.8 million.
Yeah.
In one day.
In 1 hour. In
So
40
how
minutes.
do you recoup up from that?
You don't.
You don't.
There's very few stories on these exchanges of this kind of stuff happening. In fact, I don't know of anybody that lost $10 million. I know of clearing firms that have lost that kind of money because they let customers not have enough margin money in their accounts and things moved really quickly and they took big losses. But I don't know of any desk on the New York Stock Exchange, the Chicago Mercantile, the Chicago Board of Options, the Chicago Board of Trade. I don't know anybody that ever took a hit like that. But I can't mention his name, but he lives here in Delray on the ocean. He was a well-known trader on Wall Street, and I can kind of say his name. His name, they call him the Pitbull, and renowned S&P trader. And I always did his orders on the floor on a give up. And one day, he called me after I took the hit. He kind of left me around. He left me alone for a while, which I think was what a lot of people were doing. They knew that I took this hit, and hey, how stable is his desk? Are they okay? I'd say 99% of the people that on the floor that even take $1 million hit are never seen again, yet 10 million. And what happened was about 6 months after the hit, he called me up, the Pitbull did. Excuse me, I got hair on my face or whatever. And he said, look, I'm sorry, haven't been, you always did good work for me, you defended my orders, nobody ever did that. And, I want to give you some business. He said, I clear at Goldman Sachs and JP Morgan. And he said, I don't even know who they are. He said, and I use you, so why should I use them?
Right.
So we opened up an account for him. And from 2011 and a half, middle of 2011 to, I'd say 2018, he did over $40 million worth of commission business.
So there's your recoup.
Yep. And paid the $10 million off. Looked at my partner at the desk of going back to Drexel Burnham. And I said, Brian, I gave him a little shove, and he's sitting there writing an order at the desk, and he didn't answer, and then I gave him another elbow. I'm like, Brian. And he kind of looks at me again, puts another little order in, because that's really all he ever did.
Yeah.
And on the third elbow I give him, he says, well, where are you going? Are you going to the Merc Club? Are you going to the East Bank Club? Are you going to the doctor? Where are you going? I said, I bought a home in Delray Beach, and today at 7 o'clock at night, I get on a flight, and I'm never coming back here.
Wow.
Yeah.
What a story.
And I never did.
Wow.
Because there's a reasoning behind all that. I think in anything in life, it doesn't necessarily need to be in the S&P 500 futures or options.
Right.
It could be that you have something really bad happen to you, and by hard work or by luck you get it back. You're probably not supposed to put yourself back in that same situation. Mm-hmm. So at that point, I went from having $1.5 million in the clearing firm upstairs to having nothing, to going back to making $1,400 a week. And I just told myself that there's no way that I'm going to be caught up in any more of this stuff, Have some kid at the end of the desk take me down after like 24 years in the business or something. And, it was a travesty. And the whole thing just changed my whole perspective that, like my dad used to say, life's too short.
That's right. What a story.
Yeah.
So how's your haircut? You like your haircut?
Always.
Perfect?
Absolutely.
Good length on top, the sides?
Yep.
Hopefully your wife will like it.
That's right.
So I appreciate you coming out today. Thank you for sharing your story.
You got it, my buddy. You're a good man.
Thank you. Hope you learned something from him. See you next time on our next episode.
Yeah, don't trade S&Ps.